Hi, how are you doing?
Good, great. Yeah, okay. So we have the presentation app, which, as we all know, is about accounting. So exciting. It's me and Rubie today. Usually it's just me. Super excited to have her on our webinar. She's going to talk a little bit about finance for UGC, which is always super interesting because she's the expert. We're not. So super excited to hear what she has to say. But in the meantime, my name is Etha and I'm Twirl's community manager. I usually take care of creators at Twirl, which is a UGC platform that connects brands and creators, kind of like a LinkedIn for UGC. And hopefully most of you will already be part of Twirl, but if you're not, I will share a QR code in the next slide, which you can scan, and then you can join us, hopefully, at our community. We partner with super cool brands and have worked with over 2,000 creators. So yeah, really fun out here. And we also make a lot of webinars. So it's really great. Before you introduce yourself, I'm going to do a little spoiler alert because I know we have some people joining that are not from the UK. And I did want to say that Rubie specializes in UK finance and accounting. So everything she's going to say, if you're not in the UK, take with a pinch of salt. Most of the things will probably be similar in the countries where you're joining, but not exactly, like we're not verifying that it will be the same. So if you are not UK based, just take everything with a pinch of salt and check with a professional before you actually consider everything in your UGC accounting. So yeah, Rubie, on to you.
Absolutely, yeah. So my name's Rubie. I went self-employed a couple of years ago when I founded My Style Finance. So essentially, we're an accounting firm that is kind of aiming to modernise the industry. So I think accountants definitely have the stereotype of being very boring, very strict, very stuffy, very untraditional, and that's kind of where we come in. So we really wanted to change that and make everything a lot more modern, a lot more approachable, and just proactive, kind of aim it for modern day businesses. We love software, we love keeping up to date with the new systems and processes, and just doing things a much more modern way. So that's kind of what we try and do. We want to be approachable. We want people to feel comfortable to come to us, have a chat with us, really open-ended, honest discussion. So that's kind of a little bit about what we do. But yeah, what we're going to be doing today is, I think, discussing everything that I think is probably the key points for you all to know as a UGC creator. So when it comes to accounting, tax, finance, obviously, if you're internationally based, some of the UK stuff won't apply to you, but there is still a lot of practical tips that you can take from this that I think you can incorporate into your business. So let's get started. There will also be a Q&A at the end as well. So yeah, any questions you've got, just store those within the chat and we can run through. So we've got some links here as well. You can see if you want to contact us with that first QR code, and then some links to some of Twirl's platforms as well, those second and final ones there. Tip number one is all about expenses. So I think it's really important as a content creator to be keeping track of your expenses, because essentially all these things can be used to bring down your tax bill. People don't realize that. But essentially anything that you buy that's a business expense, you can use that to decrease your tax. So it's going to mean that you're paying less tax to HMRC every year. So there's a lot of different things that qualify as a business expense. The general rule, if you're UK based, is that it needs to be wholly and exclusively for the purpose of your trade. So what that means is if you're buying something and it is completely for business purposes, so it's 100% business use, you need this product or this service or this software subscription, whatever it might be, as long as you definitely need that for your business, you cannot do your work without it, you can claim it as a business expense. And we also have here this QR code where if you scan that, I've put together a document for UGC creators. If you give that a scan, it will bring up a document that runs through all the sorts of expenses that you can claim and what you can't claim. So that's really good to jog your memory, and just make sure that you're claiming as much as you can, because every little bit of expenditure, anything that you may buy, it really does add up, and you'll be so surprised at the end of the year. Once you add it all, you'll realize how much you've actually spent and how much of a big chunk of tax you're going to save just by claiming for all of that. So I would definitely recommend keeping track of your expenses, and I'll explain how to do that in a moment. But yeah, really the rule is as long as it's for business purposes, you can claim for it. So definitely keep track, anything you might buy, and we can pop it on your tax return at the end of the year and save you some tax. So yeah, the sort of expenses that you can claim is really anything from maybe some equipment, maybe you might buy a microphone, a smartphone, a tripod, even things like editing software, accountancy fees, anything really, as long as it's for your business, you can buy it and you can claim it. Again, that's that. If you scan that QR code, you'll get a full list of things that might jog your memory, maybe some things that you haven't thought about. And there's also expenses that are typically forgotten as well. So we find things people tend to forget. One thing that as a UGC creator, I'm sure you're probably all entitled to claim is your working from home allowance. So I'm assuming a lot of you will be creating content from home, and HMRC allows you to claim a proportion of your household expenses to cover that. So that's done in two different ways. You can either claim a fixed rate. So currently that is £312 for the year. That's just a fixed flat rate deduction to your profits. Or you can claim for actual expenses incurred. And what that means is you'll need to put together a list of all of your household costs, so whether that's rent, mortgage interest, electric, gas, all that kind of stuff. You'll put that on a list. You can then send it to your accountant, and we'll take that info and we'll use all those real figures to calculate an amount that we think is more appropriate to put through as a use of home cost. There's little things like that that are often forgotten about. Even if you're not working from home full time, we can definitely apportion that to just kind of reflect the amount of time that you are working from home as well. So don't think just because you don't work from home full time, you can't claim. There is definitely going to be a claim there for you. And we'll just simply restrict it to factor in the actual hours that you spend working from home. So that's something that I feel like people often forget, and it actually ends up saving you so much tax, especially if you're doing the actual cost method as opposed to the fixed rate. If you're claiming an actual proportion of your household costs, you're going to end up saving so much money, which is definitely better off in your pocket. Something else as well that I want to cover and that a lot of people forget is things like your mobile phone expenses. Obviously, as a creator, I'm sure you're all using your phone a lot to create content. And even though that phone bill may be in your own personal name, if you're using it for business purposes, we can claim a proportion of that. So how that works is your accountant will ask you at the end of the year, they'll say, how much did you incur this year in phone costs? You know, how much did you pay each month? You'll send over that total and you'll just confirm a percentage that you used it for business purposes. So say you use your phone 60% of the time for business, we will claim 60% of that cost. So that is something as well that a lot of people forget. There are a few things that obviously an accountant will be able to remind you of. Obviously, we know the rules really well. We know what HMRC will and won't allow. So if you're ever in doubt, I would definitely recommend speaking with an accountant, just because we'll be able to remind you of everything that you might have forgotten about, even things like the use of home. We'll be able to calculate that correctly for you so that you can be really comfortable with the figures, so that if you were ever to, say, get an inquiry from HMRC, and you might have to justify your claim, you know that we've calculated it in line with HMRC's rules. So I would say they're probably the top two that I've forgotten about, and it's something that everybody is paying for. We've all got phones, we've all got bills to pay. So, you know, if you're working from home or you're using your phone for business, absolutely don't forget about it, because it will save you tax. So tracking expenses, obviously this is super important. It's actually as well, if you're UK based, I'm not too sure what the rules are for other countries. I would imagine it's probably very similar, but HMRC are very strict on keeping records. And it's something that a lot of the time kind of gets shoved to the side. People forget about it, life gets busy, and I get it, it happens, but essentially HMRC does require you to keep very detailed records of everything that you're spending your money on, as well as income as well. So anything that you're earning, HMRC wants you to log that, and HMRC can actually open an inquiry at any time. They tend to do this at random, and I know that with the next couple of years, they're actually trying to do a lot more random kind of investigations, just to make sure that people are, you know, paying the right amount of tax. So things like tracking your expenses is extremely important in case you ever got a HMRC inquiry, of course, but also for your own sake. You know, you don't want it to get to the end of the year and you realize, oh my goodness, I haven't been tracking my expenses. I don't know how much I spend. I don't know what I can claim, because at the end of the day, it just kind of, it means you lose out. If you've not tracked your expenses and you don't know, you're going to end up losing out, because all these things give you tax relief. So in terms of tracking your expenses, there's a couple of ways we can do this. We can do this more of the old-fashioned way, which I would say works if you're a smaller business, and that's by keeping a spreadsheet. So the spreadsheet, essentially what we'll need is date, so the date that you incurred the expense, the supplier name, and the amount. And if you want to keep track on a spreadsheet, you can then send that to your accountant once per year, and they'll be able to get all that info brought in for you. They can calculate your profit, calculate your tax, all that kind of stuff. So that's kind of one option. Option 2 is the option I would recommend more, especially if you're UK based. With the way HMRC going, they're introducing this initiative called Making Tax Digital. Essentially, they want everybody digitalising their accounting records, and that's coming in over the next couple of years. So the second option is software. And I think this is really good as well, because it kind of just makes your life easier. There's a lot of stuff you can use to automate on software, even things as well where you can give your accountant access to it once per year. So it's going to save that back and forth between you and your accountant. If you did use software, you can essentially just provide your accountant with access to your software. So yeah, spreadsheet is number 1. We do actually have a spreadsheet available on our website. I know that it's linked throughout this seminar, a QR code where you can download that spreadsheet, or you can use software as well, and we'll touch upon that a little bit more in a moment, and the different software applications and how you can use them. But yeah, to summarize this slide, I would definitely say make sure you're tracking your expenses. If you're ever in doubt, track it, add it to your list, and then your accountant, worst case scenario, can have a look and just say, do you know what, actually, I don't think you can claim this. I don't think it's justifiable. But definitely keep track, and we can check and confirm everything at the end for you. It's better to just check with us rather than just assume you can't claim. So yeah, definitely keep track of your expenses, because it's going to help in the long run to save you tax. So slide 2, touching upon software. So yeah, software is brilliant. I think it can be really, really scary at the start because a lot of it looks overwhelming, and sometimes software applications don't seem very user-friendly. There's a lot of features, but I promise once you get started, it would be a game changer. You'll love it. There's so much that you can automate. There's amazing software applications where you can actually use it to link other things you're working with. So for example, your bank account, if you've got a business bank account, you can get this hooked up to your software to save kind of any sort of manual data entry. So for example, Xero is a platform that I work with. I love Xero. I've worked with all the major accounting platforms over the years. Xero is my favorite. I think it's super user friendly. It's got so many amazing features, and that is something that I would recommend working with. However, if there's anything else that works for you, there's so many out there. You've got Free Agent, QuickBooks, anything really, whatever works for you is fine. Xero is my personal favorite. But some of the pros of using accounting software, I would say, is it kind of allows you to keep everything under one roof. So you can really use software, for example, Xero, to kind of manage everything in one space. So it kind of keeps your accounting records really nice and tidy. You can use it for things like invoicing. So if you are sending invoices to your clients, you can start doing that through Xero. You can even get Xero to send chasers to your clients. So it saves that kind of credit control side of things. It's going to, save you a little bit of time where you've got to actually check your invoices and do manual chase ups. You can send repeating invoices. So maybe you're working with the same organization on a regular basis. You can raise an invoice so that it pops up once, and it will keep doing that for you every single month or every week, however the frequency is, whatever frequency you set, you can get it to automatically repeat. So it just saves you a lot of time, I would say, like having to manually raise invoices, manually get those sent, manually, chasing things as well that can be a little bit awkward. We all know it can be awkward as well. If somebody hasn't paid you, you then need to chase up for money. You can definitely automate this on Xero. So essentially the chase will be coming from Xero. It'll be an automatic chaser sent to the organization you're working with. So it takes out that stress. So that's one amazing feature of Xero. But even things like linking up your bank account as well, so that all of your transactions, whether you spend some money, you receive some money, everything pulls in directly from your bank account. So obviously in that last slide, we touched upon typing up on a manual spreadsheet your income and your expenses. However, if you get Xero or any sort of accounting software platform, you can get your bank linked, and that's just going to save you from typing up those expenses, which obviously is time consuming. It's so easy to forget. So yeah, I think software is brilliant. It keeps everything really nicely in one place. And also as well, something else you can use software for is pulling off real-time reports. So software like Xero, QuickBooks, you can find something called your profit and loss report. And essentially what that is it's a real-time report of how you've performed so far for the year. So it will calculate how much you've earned in total, all of your expenses, and it'll give you a profit or a loss figure at the bottom. So I think that's another really good thing with using software is actually you don't need to wait until once per year when your accountant does your tax return. You can just pull figures off throughout the year yourself if you just want to have a little look at how you're performing. And so that's something that software is really, really good for as well. You can just get that real-time data, real-time tracking, you just know where you are, you know where you're at whatever time of the year. You can have a quick check. Something else as well that's really good is HubDoc. HubDoc is a Xero-owned platform, so if you get Xero, it is free. However, there are other alternatives to HubDoc. They are paid for options. For example, we've got Dext as well. So if you're not using Xero, maybe you're with QuickBooks, but you'd still like some software like this, there are options like Dext. So essentially how this software works is it allows you to store all of your purchase invoices and receipts digitally. So what that means is if you're on the go, perhaps you're visiting a client and you buy yourself a coffee, some lunch while you're out working away, you can snap a photo really easily on the HubDoc app using your phone. And then what that means is that photo will be uploaded to HubDoc and you'll have full transparency of it there. Your accountant will be able to have a look and see anything that you've sent over. And yeah, it kind of saves that back and forth as well. So if, for example, maybe it's gotten to the end of the year, your accountant is working on your tax return, perhaps your accountant notices a transaction that looks a little unusual, or maybe they just want a little bit more information on it, we can just go in directly to HubDoc and find that receipt. And, it kind of saves that back and forth where we may then have to pester you. So things like HubDoc are brilliant for electronically storing any receipts. Even if you get an email receipt, perhaps you buy something online, obviously that's really common these days. You might have an online purchase, you'll get an email receipt. You can forward that email to software like HubDoc and it will just pick it up automatically and it will store it there for you, which I think is a really good thing to get in the habit of doing anyway, because obviously HMRC, they are very strict with record keeping. If they were to ever make an inquiry, they could ask you to provide receipts for all sorts of transactions. So it is really, really good to get into the habit of saving your receipts, making sure you've got records. And I think as well with making tax digital, all this kind of new processes and ways of doing things where everything should be digitalized, with all that kind of stuff coming in, I definitely think there's no better time to start using software like HubDoc and Xero and just getting everything online and just kind of being as HMRC compliant as possible. But yeah, obviously there's definitely pros to it, definitely things that you can do within Xero and HubDoc to automate things, cut out manual admin for you, and just make your life easier. So if you are open to working with software, I would definitely recommend having a look. And you'll be able to get free trials as well. I don't know about the other software applications, but I know Xero, they offer 30 days free. I'm sure the other applications like QuickBooks, Free Agent, I'm sure they probably all offer a free trial as well. So I would definitely recommend it, just having a little look, because I do think that it could really save you time and just, keep everything really nicely, all your finances under one roof. So next slide is getting started with taxes. So this is something I get asked all the time. I've just gone self-employed or I'm about to start a business. What do I do? Where do I start? What do I need to tell HMRC? So essentially, when you're getting started with taxes, one thing you need to do is tell HMRC. That process is known as registering for self-assessment. So you're essentially registering to file a self-assessment tax return. And that's something that you need to file every single year with HMRC. So option number one, I would say you've got to start with registering for HMRC. So you need to register with them if you've earned over £1,000 in each tax year. That's when you legally need to register and you need to file a tax return. Even if you don't have any tax to pay, I get this question a lot. What if I don't actually have any tax to pay? Maybe you're earning in the UK, you get £12,500 a year tax free. Perhaps you're earning within that threshold, you're not going to have any tax to pay, but you do still need to register, you do still need to declare that to HMRC, frustratingly. So yeah, if you're earning over 1,000, make sure you get registered. And your deadline to do that is going to be the 5th of October after the tax year that you went self-employed. So the most recent tax year that just finished was the tax year 2024-25, and that ended in April 2025. What that means is if you started your business within that tax year, so that went from April 2024 to April 2025, if you started your business and you started to earn money within that tax year, you've got until 5th of October this year, so 5th of October 2025, to register with HMRC and let them know that you had untaxed income that you need to file a tax return for. And that's the same every single year. So that deadline is always the same. It's always going to be the 5th of October after the tax year that you started your business. Worst case scenario, if you miss that deadline, I mean, it's at HMRC's discretion what they do. In my personal experience, I've never known anybody to get a penalty, but I would not recommend leaving it to last minute, because essentially when you register for HMRC, they will send you something called your unique taxpayer reference, and you're going to need that in order to file your tax return and pay your tax. And what happens is people that register really late, closer towards the deadline to when the tax return has to be filed, what happens is HMRC get very backlogged, and they are often very slow to then issue you with your unique taxpayer reference number. And without that, you can't file your tax return. So that's why I would recommend doing it sooner rather than later. You could even start your registration process throughout the year. You know, I mentioned that the deadline to do it is the 5th of October after the tax year that you started the business. You could do it immediately. You don't need to wait. So I definitely recommend don't leave it too last minute. So many people do, and they get in a bit of a sticky situation because HMRC haven't given them the stuff that they need to file the tax return, and they miss the deadline. It's instant penalties. So definitely register sooner rather than later if you're earning untaxed income that you need to declare. Second point, I would say, again, we kind of touched on this earlier, but tracking your income and expenses absolutely needs to be done. HMRC are very strict. They make inquiries at random, and it is unlikely. I don't want to scare everybody by saying you're all going to get investigated. Chances are that's not going to be the case. It is done at random. But if HMRC were to ever make an investigation, they could ask for proof of certain income, certain expenses. So definitely getting into the habit of tracking that throughout the year. And then when tax time comes around, you can just hand all that over to your accountant, or if you're doing your tax return yourself, you've got everything you need. You can just crack on, get started. It's just so much easier if you do keep track of it throughout the year. Saving for taxes as well. So this, a lot of people ask me, what's the best way to prepare? How can I make sure I've got enough tax set aside? And there's no kind of wand I can wave and magic trick and you've got the money. There's really not. It really is as simple as saving for your taxes. That's really all you can do. Setting aside money, so anytime you're getting paid, I'd recommend setting aside about 20 to 30% of that just to cover you for your tax and your national insurance. Obviously, in other countries outside the UK, that may be different depending on what your tax rates are there. But I'd recommend maybe if you're based internationally outside the UK, have a look into what your tax rates are and just try and save that amount, I would say. And then hopefully by the end of the year, you'll have everything that you need. And maybe there might be a little bit of a shortfall, but it will be much smaller than if you hadn't saved anything. So yeah, unfortunately, there's no magic trick we can do to sort that. It really is as simple as you need to just be quite organized and make sure you're saving. And I know it's tough, especially when you're first starting out. Obviously, every penny you make is so important when it's your first, your first few months, your first year in business. You want to keep it all. But it really isn't worth it when you get to the end of the year and you end up thinking, oh my gosh, I've got all this tax to pay by this date. I haven't saved anything. What do I do now? So yeah, if you're able to set, even if you can't do the full 20 to 30% that I recommended, if you could just set aside something, absolutely, I would recommend it just to help you out when you get to tax return time. But worst case scenario, if maybe you haven't saved anything and it gets to the tax deadline and you realize you can't pay on time, 100% would recommend just contacting HMRC. Don't be afraid of them. Let them know. Definitely as soon as you kind of feel like you're not going to be able to pay your tax on time, phone HMRC's self-assessment line. You'll be able to get their phone number on their website and just let them know. Be totally upfront and honest with them and just say you're not going to be able to afford to make the payment. They will then have a chat through with you about what you might be able to afford, and they'll set you up a time to pay arrangement so you can pay over installments. So what that should do, that should stop you being charged any late penalties because you've told them, but it won't stop late payment interest. So if you're spreading the cost over a certain number of months or years, they will charge you interest on that, unfortunately. But definitely keep them in the loop, because what happens if you just bury your head in the sand and you don't tell them, they don't hear from you, and you owe tax, they could end up taking you to court, selling the debt to a debt collector, even closing down your business altogether. So it's really not worth it. Don't be afraid to tell HMRC that you may not be able to afford the tax, and they will be able to do something for you. Last thing to cover is knowing your deadline. So this is really important. For all of my clients, when I do their tax return, I will always send them an email and I'll just say, this is the deadline. I really strongly recommend you add it to your diary so that you know. And then we also send emails as well when the deadline is approaching, so everybody gets a reminder from us every year. But I would definitely recommend, maybe if you're using, maybe you've got a digital calendar, maybe a Google calendar, adding that as a recurring event every single year, adding your deadline, setting it up to repeat every single year, just so you've got it in there, because obviously we don't want to be missing any deadlines. We're going to get penalties, we're going to get interest. HMRC, it can be very unforgiving when it comes to charging penalties if you're late to pay. So definitely knowing your deadlines. So your deadline for registering for self-assessment is the 5th of October after the tax year you started. Every single year, that never changes, it's always that. And then when it comes to actually filing your tax return, that's going to be the 31st of January every single year after the tax year. So to use kind of an example of that, the most recent tax year ended in April 2025, so just last month. You will have until the 31st of Jan 2026 to file your tax return, and that's going to be the same every year. So this current tax year we're in ends April 2026. You'll then have until January 2027 to file that, and that's always the same every year. And then when it comes to payment as well, it's the same deadline. It works in the exact same way. It'll be the 31st of Jan every single year. So it's about 8 or 9 months after the tax year ends, you'll have to make payment as well. So those are your deadlines. I can't imagine they would ever change. They've been the same for a very, very long time. They're the same every single year. What I recommend doing is maybe just adding to your calendar a recurring reminder every year, just so you don't forget, because if you forget, they will charge you a penalty immediately. Even if you're, say, a minute past the deadline, they're so strict. They'll charge you a penalty, and it's not worth it. So definitely add the deadlines to your diary, because you do not want to miss them. We've got as well this QR code here that you can scan. That is an income and expense tracker. So if you want to scan that and download that, that's a complete free resource that you can get from our website, and that is something that you can use to track your income and your expenses. If you would rather use a spreadsheet as opposed to software, feel free to download that and get started with that. So next one is when to hire an accountant, and I get asked this so many times, but realistically, you don't legally need to hire an accountant in the UK. I can't speak for other countries, but in the UK, you don't need to hire an accountant, but obviously you can if you want to. There's a few benefits to it. So pro number one, I would say, is that we can help you save money. So obviously there is going to be a cost, an accountant's going to charge you, of course, but because we know the tax rules, we know how HMRC works, we're able to claim back tax on all sorts of different things. And we've got very good knowledge of the tax system. So it's things like use of home I spoke about earlier, mobile phone costs, things like that we know about that you may not necessarily know without that in-depth knowledge. So even though there is going to be an initial cost, an investment for our services, oftentimes the benefits are greater in terms of tax savings. Even things like peace of mind, if you're confused about the tax rules or you're worried about the mistakes, we can clarify everything to you. We will remind you when the deadlines are. We will tell you when it's time to start on your tax return, how much you have to pay by when. Even things like, as included as part of our services, is we will speak to HMRC on your behalf. So if anything crops up throughout the year, we will phone HMRC and we'll chat with them directly, or we'll write to them. So we will liaise fully with them. So it kind of just takes out that kind of you needing to approach HMRC directly, which is always a bit of a pain, to be honest. It's never really straightforward. but that's something that we'll do for you. So things like that, and saving time as well. Obviously, it's super important. You want to spend your time creating content, doing what you love, earning yourself money. These are all kind of the benefits. But I would just say it really depends on how comfortable you are with everything. I've got clients that really don't like anything to do with accounting, tax, finance. They hate it. They want loads of hand holding. So for them, they really want us actively involved. They want us doing everything. But then I've got other people where actually they're really comfortable. They want a little bit of support, but they actually have a really, really good idea of how everything works, or they just find it interesting and they're happy to get stuck in and, find things out for themselves. So I think it just depends. It's personal preference. I think it depends on if it's something that, a service that you think you're going to value, you think we're going to be able to help save you money and peace of mind. And it really depends on what you think and how you feel. But yeah, in the UK, there is no legal requirement. But yeah, I would just say it's just personal preference, whatever you're comfortable with. And it could also be something as well where maybe you decide to work with an accountant for 1 year. And if you don't actually quite like it, or you feel like actually I'd rather do it myself in future years, that's fine. You can then take it back yourself and do it in future years. It's not something where you sign up to work with an accountant and then you've got to use this year on year for the rest of your life. You could give it a go and see how it goes. And yeah, I would just say ultimately it's personal preference. It just depends on what you're comfortable with. And I think that's everything. So I hope everybody found that really helpful. Obviously, yeah, Q&A time. Let's have a look at some of those chats, shall we?
Yeah, thank you, Rubie. That was so interesting, honestly. Very many mind-blowing things we heard. So how does tax return and allowance work if you already have another job? That's a great thing because a lot of UGC creators, this is their side hustle. So how do we do this?
So how it works is when you do your tax return, you will need to include your employment income on there as well. So obviously assuming usually, depending on how much you're earning, HMRC will be taking a tax amount every single month from your salary. So your employer will be dealing with that for you directly. They'll take the money from your pay and they'll pay that to HMRC on your behalf. So that doesn't matter. You're not going to be getting taxed twice. The fact that we have to still include your employment income on your tax return doesn't mean you're going to get taxed twice on it. It purely just has to be on your tax return, just because it forms part of your total income. So we need to know your total income just to kind of figure out the tax that you owe correctly on your side hustle, your self-employment income. So how it works is we would include that on your tax return. And then sometimes mistakes do happen. I've had it before where clients are self-employed and employed and they've paid a little bit less tax than they should have done through their employment, or maybe they paid a little bit too much. And doing the tax return actually allows us to iron out those mistakes. So I've had clients that have received thousands of pounds of refunds because it actually turns out that their employer has done their taxes wrong every month. Their payroll has been processed incorrectly and they've been deducted too much. So it's very, very simple. What we would ask is for your P60 or your P45 if you left your employment throughout the year. Your P60 should be given to you in about April or May every year. So we'd just add that on as part of your earnings to your tax return. And then that will just go on alongside your self-employment income, really. And as long as you paid your tax on your employment income, we'd just be taxing you on your self-employment income. So it's very, very simple.
Can you claim nails as an expense if I'm using my hands?
No, we can't. It's really frustrating. I get this all the time. It's people saying, I need to get my nails done because obviously they're filming, or my hair, all this kind of stuff. And I would love to say, yes, I get it completely. Yeah, it's definitely, you want that done for your content. Absolutely. But HMRC, if they were to make an inquiry, they would definitely say no on that. And the reason that is because it's got such a personal use element there. They kind of argue it as something has to be exclusively for the purpose of your business. So you don't actually need your nails done to produce content, or your hair, or whatever it may be. You don't actually need, or clothes. Clothes is another one that people will buy new outfits for, or, I've got clients that are solicitors, they buy themselves nice suits and things, but you can't claim it, unfortunately. It's because it's got that personal element there. You're not just getting your nails done for the content. You can go and enjoy those lovely nails out having dinner, out, in the weekend. It's stuff like that. And unfortunately, they're very strict. And it's the same for clothing, same for anything like that. If it's not completely business related, they can be really funny about it. So I would say no, even though I'd love to say yes, because I completely get it.
Do I need to pay class 2 national insurance if I'm fully self-employed in the future because this person wants maternity allowance?
Yes, so maternity allowance is a really good one. So maternity allowance is based on your national insurance contributions. So it's about 13 weeks of national insurance contributions are required in the 66 weeks before your due date. So there's a few different kind of time periods that you'll need to work out in order to make your claim. HMRC have got so many resources online as well that you can actually use to work out, like it's called your test period, and your actual dates and timeframes that apply to whether or not you are entitled. But yes, class 2 is what entitles you to that. And class 2 is very cheap. It's about £3.50 a week. So it's really low. And what happens is if you make that claim, so say you submit your maternity allowance claim to HMRC, you can do that from 26 weeks pregnant. And I would definitely recommend doing it as soon as you reach that point, even maybe just before you get to 26 weeks in your pregnancy. Fill out the form so it's good to go, and then just submit it straight away just to prevent any delays. But yeah, even if you submit it and it turns out actually you've not paid enough, they will contact you and they'll explain that situation. They'll say, this is how much money you need to pay in order to get the full rate of maternity allowance. So don't worry too much if you're not too sure, because they will contact you and they'll tell you this is what you need to pay. And obviously with class 2 being so low, it's usually never really much. So yeah, they will contact you. They'll give you the chance to pay that. But yeah, I just recommend doing that claim ASAP as soon as you hit that 26 of your pregnancy. Definitely get it submitted.
Another one on the nails. What if the brief specifically states I need to have nice nails? No.
It's a good question. Do you know what? It really, a lot of this stuff and a lot of my job is what can you justify to HMRC? If they were to ever ask, what can you justify and how can you justify it? You know, if you're in doubt and you think it is a little bit of a funny one, I would say don't claim, or definitely don't claim unless you get an accountant's point of view and where they can look into it and just actually advise you. But it really depends on if HMRC were to inquire about that and how can you justify that to them. If you think that it is justifiable, because that's the thing, it's not written there exactly. HMRC don't say you can definitely claim for this or you can't claim for this, but in this circumstance you can. There's no like real, you know, confirmed yes or no for these things. But I would say take a reasonable approach, take a sensible approach to it, especially if you're doing it on your own and you can't ask a professional. Take a reasonable assessment and, you know, judge it what you think is kind of a common sense approach. And if you think that it's justifiable to HMRC, if they were to inquire, then you can claim it and see what, you know, see if anything comes of it. But yeah, it's just kind of justifying it to HMRC really if they were to ever make an inquiry, because they could challenge anything. You know, there's so much stuff that is a little bit more confirmed. You know, we've got a lot more set guidance for it, but they can challenge anything, and you know, it's kind of on you to then say actually, no, this is what I've done. But I think as well the other thing is it worth it to you? So things like if it's more like maybe a low cost value, or nails, if it's quite low cost, you might want to just take into consideration, is it worth the possible aggravation if they were to challenge it for what would be about 20% of the cost of that. So if you know, you say you spend £30 getting your nails done, you'll get about £6 tax saved. But it is really just what you can justify.
Yeah, I hope that was really helpful. Anything else you wanna say, Rubie?
No, I think that was everything. Thank you so much for your time. Thank you for organising this, and thank you for everybody showing up. I really hope you got something of value.
Yeah, I'm sure they did. Thank you so much, everyone. Have a great evening.
Take care.